ultimately, this is a day to rejoice and to be happy for and to be thankful for, and it is the American spirit. And maybe we've regained a little bit of, at least from a portion of the world anyway. Maybe half the country doesn't think that. I don't know, but it gives me pause for a moment that maybe the credibility of the elections is starting to at least gain a little bit more confidence. And but I don't see it materially changing our problems with the dollar, with our debt, with interest rates. These are things, look, Trump understands the whole concept of bankruptcy, a default, a reset. Could that happen? Yeah, I think it probably could. I think you could see something that is some form of a reset of the system. I don't know what triggers it. I don't know what it looks like, but you have to ask yourself a question: how do we ever pay off this massive, massive debt with the continued fiscal irresponsibility that we have, adding, a few $1 trillion to the debt each year, and the servicing of the debt now outpacing just about everything, and close to $1 trillion a year, or at $1 trillion a year? These are numbers that are so big they're almost impossible to ever address. And even if we balance the budget today, who pays for Medicare and Medicaid and Social Security and government military pensions, which they tell us by their own admission are 5 to 6 times higher than the debt that's on the books? So it's not an easy task he has, but it starts. Sorry, banged my mic there with my hand. It starts with getting some form of our culture back. Close your military bases, protect your border, bring everyone home, stop meddling around the world, and start, doing things to become more self-sufficient. And that's what you're talking about with bringing the factories back home and the workers back home, and start manufacturing all of our medicines and all of our, microchips and all of the things that we're so reliant on the rest of the world for. We have so much in the way of natural resources underneath us. Everyone wants to live in a world that we can pass on to our children. But at some point, at the same time, if you rely on everyone else for things like energy and commodities that you need, you put yourself in a very dangerous position. So there has to be a middle ground of doing things that are responsible to the environment, at the same time are responsible to our future generations, because we're bankrupting them as it is right now.
Real quick, today we have gold back up $25. You have the dollar index. Where are we on the dollar index? Dollar index is down 59 cents. And so, it's one of these deals where we need to think more. Instead of thinking day by day, minute by minute, we have to look at a bigger picture here. And the bigger picture says that we've painted ourselves into a corner. We've painted ourselves into a corner. We have a dollar that is unjustifiably strong based upon a massive debt position, most of it accumulated at very low interest rates. And so if we raise interest rates to fight this, if we pull the Volcker card, if we try to fight inflation, and by the way, inflation is much higher than they tell us. The CPI is a lie. All people need to do is go to shadowstats.com, which is John Williams' website, which talks about the suppression of interest rates and the lying of the numbers that come out of the Bureau of Labor Statistics as it pertains to unemployment and to inflation. And all he does is measure these things the way they used to be.
Why do you want to buy gold right now at record highs when I can just dump it into the S&P? Is there an argument you can give them to really rationalize why they should put at least a portion of their money into gold and not everything into stocks, which are at insanely high valuations today?
Yeah, I mean, the S&P is just at all-time highs, just like gold. You go back for 25 years. With using the S&P 500 since 2000 with dividends reinvested, you get 9.6% annual return on average. Gold's at 9.9%, has no counterparty risk. You look at stocks like or indices like the S&P 500, or even better, the Russell 2000, and you see massive red. These, by and large, the bigger swath of the economy that represents these larger indices, the S&P 500, the Russell 2000, almost all of them are underwater. You got a handful of stocks that have been leading the way which is called breadth, B-R-E-D-T-H. And it's poor, very poor. And it's usually a very ominous sign where it's an inverted pyramid, where just a handful of these stocks are holding up the entire market. And I think that when you talk about money creation and when you talk about inflation that we've seen and low interest rates over the last 15 years, that the primary beneficiary of these higher prices have been equities, have been bonds, have been real estate. And largely because of something called Gibson's paradox, which is the inverse relationship in essence between real interest rates and the price of gold. They had to step on the price of gold and silver, and everything else went parabolic, yet precious metals got hammered. Precious metals, they want us to believe, are a commodity that have, that have no monetary value any longer. And they do that by using these levered futures contracts where you can trade 3.5 times annual global mine supply per day in silver in London, just in London, and 2 times global mine supply in gold, just in London. That's not even taking into account the COMEX, where you can distort supply-demand fundamentals. And if gold and silver would have been roaring, it would have signaled that the emperor wears no clothes. It's signaling that it's the Wizard of Oz behind the this little frail old man behind the curtain. And so they've stepped on gold and silver. So we don't even know where price discovery would land gold and silver, but arguably much higher. Right. You look at UBS, or excuse me, Deutsche Bank just came out and said, what did they say? They said that if Harris wins by 2029, gold's at 4,000. If Trump wins, it's higher, going up all the way up close to 4,200. You have all these banks saying that will be north of 3,000 by next year. I don't know. In my money, silver is the most undervalued asset on the planet because it hasn't been allowed to express itself. And gold, even at these levels, it's under its inflation-adjusted high. It's being accumulated by the most sophisticated, well-informed traders in the world at a level the world has never seen. It's outpaced the S&P 500. It has no counterparty risk if it's in your own possession. And, there's, that video and the book called The Great Taking by David Rogers Webb. I don't know if you've seen it, Sean, but if people haven't, you can go to his website. I think it's a free book, greattaking.com, or better yet, go to YouTube and type in David Rogers Webb, The Great Taking. Watch it. He narrates it for an hour. And it talks about the DTCC, how all of the securities are held in this fund or this trust where ownership or priority of ownership, you are subordinate to others ahead of you. It's a very frightening thing where counterparty risk takes a bigger role in all of this. And I don't know, did you see what happened last Friday with the bank in Lindsay, Oklahoma, by chance? I don't know if you saw that.
Not exactly.
So, what we saw in Lindsay, Oklahoma a week ago Friday was the first bail-in in this country. And it was written into law in the Dodd-Frank Act, and yet no one's talking about it. You want to talk about reasons to own things in your own possession. In Lindsay, Oklahoma, the bank failed, and they had $7 million in uninsured deposits. You contrast it with Silicon Valley Bank had hundreds of millions in uninsured deposits. Oprah Winfrey and all the Silicon Valley tech startups, of course, they were bailed out illegally. But because the Dodd-Frank Act says, no, they won't be bailed out, they'll be bailed in. Well, this bank was failed, and another bank took over. And those deposits last Monday were made available, those that were insured. The uninsured deposits, the FDI said 50% would be made available that Monday, and the other 50% you will possibly get over the next 4 years after the assets of the bank are sold off. In other words, you have $1 million in this bank, 250,000 is insured. That leaves 750 uninsured. You get half of that. That's 375. That's 6.25. You get that Monday. The other 375, say goodbye to. You're never getting it. And if you do, you have up to 4 years to receive it in the form of stock of the new bank. That money's gone. And so when you talk about reasons to think differently, to be unconventional, Now is the time. When you think about having removal of counterparty risk, that's going to be more pervasive. And this is the reason you're seeing all these countries buy gold and silver and bring it home too, because of the counterparty risk that has been baked into the system, whether it be on that level through sanctions and outright confiscation of assets, or on this side of the table, where traditional assets like stocks and bonds and even banks are not safe anymore. I'm reading right here, Berkshire Hathaway just announces they're freezing buybacks and holding 325 billion rather of cash. It's an all-time high for Buffett, and it's doubled its cash holdings from this time last year, or even from the start of the year, really. And you know, he's the greatest value investor of all time. What does that tell you? What does he see coming? I think that's something that's concerning. We focused a lot about his divestiture out of Bank of America, but now we're seeing it on a wholesale basis and freezing buybacks, which is very interesting to me heading into this this chaos. Look, man, I left Minnesota after watching the protests that were supposedly peaceful that weren't, and I'm just wondering what this looks like after the election. I don't know. Have you and I talked about Lindsay, the Bank of Oklahoma, Lindsay, Oklahoma? Did we chat?
Yeah, we talked about it a couple weeks back.
Okay, good. So, I mean, you have all of these issues with the banks that are over leveraged and undercapitalized. You have the liquidity within the system drying up. You have the BTFP program expiring in 2 days, which is the Bank Term Funding Program, which injected liquidity into the system. And at the same time, you have the reverse repo market almost down to nothing. So these pools of liquidity that have been so valuable to the banks and to the system seem to be drying up at a very interesting time.
Right.
You put into the mix the election and someone like Buffett, who has his, you could say, ear to the track, being as deep into cash as he's ever been. It makes you wonder. You know, at the same time, we're seeing all of these insiders like Bezos and Zuckerberg dump shares of their own shares at record pace too. So you see a lot of insider selling, and the insiders, well, they know the playbook, and the insiders, they know the fundamentals. Never a good thing. And then you have interest rates rising on the back end of the bond market just at the wrong time, when the Fed is trying to control interest rates by pushing down the front end. And, they touted this great labor market as why they had to do this, because, the economy was so strong, and it has nothing to do with that. It has to do with the fact that it's the opposite of that. The economy is very weak. The jobs numbers that just came out here the other day had a 12,000 job creation. That's it. However, they're expecting 120,000. We had 12, and they keep revising all of the numbers. They revised August down by 50, 60, 70,000 jobs from where it was. They revised September down again, quietly revised numbers after the fact. They'll revise these down too. But what is hidden in these putrid numbers is the fact that, we added 40,000 or so jobs to the government. And so we shed 28,000 jobs in the private sector and added 40,000 jobs to the government. We can't even afford the ones we have, so let's just throw some more on the payroll and borrow more money to pay them, which showed a $12,000 net increase in hiring, which is just putrid. That'll be revised down negative, I'm sure, after the election. They didn't want to have a negative print heading into the election.
What are your thoughts on the BIS contemplating shutting down Project Enbridge? Why now? And is this an acknowledgement that the BRICS nations are a greater threat to the dollar than we have been led to believe by the mainstream media?
Yeah, I mean, like I said in part one, it's almost like a James Bond movie. It's almost like espionage. I know that sounds kind of grandiose, but this has been a project that the BIS Innovation Hub has stood behind for quite some time now. And to make these statements the way that they are right now, I find to be perplexing to say the least. Why wait until the last moment to do this? Why wait until it had been already released? And when you get the State Department telling us that alternatives to the Swiss system and undermining the dollar's role threaten democracy, you start to wonder: is this does this have a little bit of arm twisting involved in it? And I think it's disingenuous to say that Putin would be the only one to benefit from the multipolarity, when it would really benefit all of these developing nations that want to use Enbridge to trade a basket of local currencies, which would only strengthen their own economies. I think that it's very interesting that you had a meeting last week in Washington where the BIS was there with the IMF and the World Bank and all the Western policymakers. I think they got a little concerned about what was happening. And you get Augustus Carstens, who kind of looks like the kid from Willy Wonka, Augustus, and he says, and it's really gross. I mean, I'm sorry, I find it to be distasteful because they've spent all this time together. And then at the 12th hour, he comes out and says, we cannot directly support any project for the BRICS because we cannot operate with countries that are subject to sanctions. I want to be very clear about that. And Agatha Demarius, a senior policy fellow at the European Council of Foreign Relations. In the long run, there is no doubt that the mechanisms like BRICS Bridge would be useful for China, Russia, or others to hide sensitive transactions from Western authorities. The underlying technology is a tool to circumvent sanctions and potentially undermine the dollar's dominance in the global financial system. The hubris I find to be distasteful. And at the same time, you had the BRICS come out completely reiterating their commitment to enhancing financial cooperation and cross-border payment solutions in a cooperative manner. The entire BRICS alliance is one of cooperation. There is no mandate that holds them all together. It's more like, I guess you could say, action and behavior oriented and reputation oriented in the respect that it's cooperation. And really, that's what good business is. It's a handshake. It's earning trust in a system that is certainly lacking trust. And, again, they reiterated over and over again their commitment to enhancing financial cooperation and cross-border payment solutions. And all of this is to break free from the West. So you're right. There is a common enemy. My enemy's enemy is my friend, that kind of thing, or a common goal. And one would wonder if the divisiveness, that camel sticks its nose under the tent again once and if they were to achieve their interests. But look, for now, that is really something that I saw as very important. This came out the very first day of the meeting, and they wanted really to make it seem as though these are countries pulling together and putting aside differences. Of course, certain things happened throughout the meeting that changed my focus on what was really very important. But that is one of them, of course, certainly. There are other very important things that have come out of this meeting. But one thing is in my opinion, for sure, and it's really not debatable, that this is a growing chorus of countries. And while there will be setbacks, while there will be challenges, I think to underestimate it is a big mistake. Again, 47 countries have expressed interest, 26 formally, 21 informally. And I think that list will grow as they really solidify everything that they're trying to do in all areas, from commerce, from trade routes, from common settlement currencies, to trading in local currencies, to commodities, to commodity exchanges, to all sorts of things that are on the docket. I think it's important to understand that this is one of these deals that, myself included, I think it's easy to expect things to happen faster than they probably ought to. And one thing that they have exhibited, I think, is restraint in that matter, in an attempt to do things the right way. And by some of the things that we're seeing, I would argue that they are.